This is Martin here from seekedge, the channel for learning about investing and trading. Welcome to another daily technical market analysis show, and we're going to analyze it for August 18th, Wednesday. Tomorrow is an expiry, and where we are going to look at what happened in the market today, and also look at how we can plan for a better trade tomorrow. So, in case you're not subscribed, please right away click on the subscribe button and share it to all of your friends who you may think may benefit from it. And that's the only thing that you can do. It does not cost you anything and motivates us to keep doing this every day. Thank you so much. So, as usual, today also we will be looking at the pre-market analysis based on all of these parameters that we see in the left side on the charts, right? For the price action and all the chart parameters we'll look at, and on the right side we'll have additional analysis based on open interest options, derivative strata, the global commodities, sectorial watch, and institutional participation, and all that, and we'll wrap up with some actionables on some stocks or indices, how to trade, right? So without wasting time, let's quickly go to the index charts. So this is the Nifty 50 index charts that you're seeing here. It's clearly a breakout that is continuing, and it's a bullish candle, right? Very bullish. So, but look at Bank Nifty. Bank Nifty, the indices shows that this is another day of consolidation that's happening, and the candle pattern looks like a hammer. A hammer has a weak shadow on the bottom, which shows there is presence of pulse, right? It's not letting it go down, so it's consolidating basically. It has been doing the same thing. The previous candle, if you see, we discussed yesterday that this is a kind of a gravestone doji, which is bearish, and that's exactly what happened. The Bank Nifty fall down and lost 200. It recovered actually. It had lost nearly 405 points intraday, and then it recovered basically. So that is the power of bearish candlestick, symbol candlestick, gravestone. Gravestone, when it appears, you can expect some amount of bearishness for sure, right? That's something. That's the candlestick study. Now let's go to the intraday on the lower time frame and see what exactly happened in Bank Nifty. So 17th, if you see, it was a downtrend till 12 o'clock. So first half is downtrend, and the second half is a recovery, another V-shaped day, right? Bank Nifty, what happened? Bank Nifty has consolidated in the morning and then fall down, and then a V-shaped recovery and much more. So it's another V-shaped day on the Nifty, right? So this is like it's very difficult for intraday traders to position themselves. They get stopped out, on both sides. Like it's tough to trade this. Yesterday this happened multiple times, right? In the shorter time frame, if you see. So that's exactly what happened intraday. And let's now go and see what else can be learned from the candlesticks. So Bollinger Bands, we clearly know that it's a volatility expansion, and this looks like it's walking on the bands of the Bollinger. So volatility expansion is happening for sure. Bank Nifty also, the volatility expansion just begun, it failed. Here also earlier in the July month it started the expansion, and then with a big gap it fall down and it failed. Here again the volatility expansion is not really happening, right? So that is what Bollinger. But Nifty clearly it's walking, it's heading upwards on the Bollinger, right? Expansion is correctly happening. Now let's look at the levels. So you'll have to shift the levels now further up, right? Because Nifty made an all-time high today. Towards the close, it hit 16,628.55. Another all-time high was made today, right? So, but make a note that it is 61.8 Fibonacci extension projection, right? It's a projection of where it could move. So it's hit at that exact point, Now anything 61.8 is very crucial when it is a retracement. Also, if it is breaking the 61, most likely it is going very bearish. Similarly, this is on the upside. It's a projection estimation of how far it can go. So above 61.8, if there is a closure happening, definitely 17,000 is, it's an easy task. It's hardly 370 points ahead for the, it's just that the bank nifty is not breaking out, that otherwise it would have happened long back. So let's see if there is any resistance that can be seen at this 16,630 to 16,600 levels. Otherwise it is uncharted territory. It can go further to 16,800, which is the next projection, 78.6 level fib extension, right? We can go till that and then further beyond to 70. Now below you have the first support seen at 16,350, then you have 16,150, and then you have rounding number 16,000, and below you have 16,950 to 850 band. That's the support resistance for Nifty. Bank Nifty, nothing much has changed because it is unable to cross this 36,500. It had closed above 36,000 weekly after 25 weeks of not doing that, but today it missed and slipped from that. Right? It slipped down into the next support zone of 35,700 to 35,900, that zone, right? This is a support zone where it had rested long period of time. If you look at 4, 5, 6, 7, 8, almost 10 days it had rested on the same place, and it had resisted on this place equal number of times earlier. So it's still hovering around that. So it has to cross this 36,500 for sure as the first resistance, and after that it has to cross the 37,700. Below that, once if it slips out of this 35,600, then you get support at the FIB 23 level of 34,800 kind of levels, right, to 34,400 there. So that's nearly 1,000 points of dip, which may not happen. Most likely it may consolidate here and then, right? So that's about the support and the resistance levels for the bank nifty. And now let's look at the momentum of Nifty, right? The momentum indicator, RSI indicator, is showing that it is clearly on the bull zones, right? Nothing to see there, right? It's heading north, 77 up. Bank Nifty, you look at that, it has slipped once again. It had slipped earlier in the 10th August again, and again once again it has dipped into the sideways zone in the momentum. So momentum has slipped, right? How about the trend of Bank Nifty? Trend of Bank Nifty also closed over today, and strength of that is dipping down, which is concern. The trend indicator ADX of Nifty, you look at that, it's already in the bullish zones, absolute no problem. The strength is increasing day by day. So great strength and momentum in Nifty, right? Sideways and bearish trend and momentum and trend, right, as what indicators show, right, for the bank nifty, right? So that's about right. That's it. Now let us go to the right side of the study. We look at, I'm not sure whether the futures open interest data has come or not. Yes, so it's a clearly a long build up on the nifty on the futures open interest, and here you can see that it's a short build up on the bank nifty. So it's completely contra, right? Now let's look at the open interest of nifty. The put call rate is 1.55, which is bullish, right? The chart is also bullish. You can see that the highest open interest seen at 16,500. It's a put option, so the highest support is at 16,500. Imagine, very good support. After that you have the highest support at 16,000. So the resistances are very low, right? You have the highest resistance at 16,700, and that means 16,700 is where we are now. So we are all less quantities. So it's clearly bullish as per the open interest of the options data. The bank nifty for tomorrow's expiry, right? The PCR ratio is 0.73, means it's not bullish. It has to move above 1 to be called as bullish, so, right? So that's a concern. The graph also shows that this is a bearish graph for the next expiry. 36,000 is the highest resistance. The resistance, see the green bars that here, this is all called 35,800, 35,900 and 36,000. Huge call writing has happened, and these all would turn out to be resistance that need to be covered tomorrow, right? So this is a bearish chart that you are seeing. As per the operator's option, it is a bearish. So 36,000 tomorrow is going to be crucial, whether that is getting conquered or not, right? So put call ratio is also not giving much hope on the bank nifty. It's no. So yeah, so bank nifty has to catch up on all items, so it's bearish on the charts, it's bearish on momentum, bearish on trend. Bearishness is also seen on the operator's options data. Now let's see what happened to the VIX. The volatility index actually has shot up since last 2 days, right? So you can see that if you go to the line chart, you can see that today it stayed flat, same as yesterday's, but 13.4 is at a near to the 13.7 level, which is the highest since July, right? So it's heading towards that, so it's not dipping down. So it is moved up from the 11 and 11 point levels to the 13.45 levels, right? So volatility has increased, but still it is at the very low levels. And even if the volatility is low, the spikes, volatility spikes are kicking out intraday, speculative trades, right? Now let's see what happened in the institutional purchases today. So you can see that there is selling small amount that happened of 340 crores, and there is buying DA of 266 crores. So net you can see that Fyers are selling but not selling huge. DAs continue to be buying and supporting. So that's some hope from the institutional side that it's not heavy selling has not happened today also. And sectorial watch, if you see, you can see the heat map and you'll get an idea on how the sectors perform. So you can see that FMCG and IT is all that performed, major indexes. FMCG, all of them performed. Titan, Hindustan Unilever, Tata Consumer and Bata, so all major FMCG. IT, everything performed. Infosys, TCS did a breakout. Everything is breaking out. Momentum breakout is what is happening in the IT. So let's look at the indexes once more. Let us look at the IT index once more. It's breaking out and heading up like anything. So here this is kind of a so the momentum is heading up, right? So there is a vertical up move that is happening, so we have to be slightly cautious. Whenever it moves vertically, it will come down also vertically, so we have to be little cautious on that. But it is clear trending up, so trail the stop loss. All the index, so Mindtree is doing good, Infosys is doing good, TCS is breaking out, Tech is doing good, Coforge is doing good. So almost all the IT packs, Wipro is doing good. So all are clear. HCL is also doing. So all are clear breakouts. So trail your stop losses and have tight stop losses, because vertical falls also is possible. So IT clearly bullish. Now metal had turned bullishly, but again it's zigzagging. Now it's losing the momentum. It cannot just go up and then now again it slip down today with a wide range bearish candle. So here also you have to be you have to get the confirmation that this zone of resistance, where it is consolidating for some time, has to break out. So this looks like ascending triangle breakout, but it is taking time for it to move up. So 5930 may be the point where we should, if it's a closure happening above that, we should be bullish. But otherwise metal can still be mentioned in the bull, as doing good, right, with respect to the momentum. Auto is bearish in so many days, and today you can see that the same area where it reversed back earlier, right, in July 30th, the same place it has retested. So that is showing that there is some good support that is there at this line, this level. This level will not be broken because it has retested 2 times, and that seems to be a major support, previous resistance area. So this should work, this area. So this bullish hammer indicates that there is bull presence there. So, but otherwise if you see, auto is sideways momentum wise, right? Pharma is also turned bearish, and this it is now slipped momentum below 40 and then resisting there. So pharma is not to be touched until you get a confirmation that it takes a support at the lower levels here on the momentum, or it moves above the 60. Otherwise you don't have to touch. So it continues to be sideways, auto and form. FMCG is bullish. It did a good breakout. It was pending since so many days. You can see the W pattern breakout did not. It failed once, dipped again, and made another one. Then again failed, and then dipped again, and then now this time it has broken out. This shows that the FMCG stocks are something that you have to look out now. It is bullish, right? You can add that along with the IT. Now that is. So energy had some up move, but you can see that the momentum is resisting, and it may not sustain. Derivatives had a good breakout, but it's taking a long time after the bounce from the hammer pattern that you see there. It is again going down and consolidating. So you have to wait for some more time. Probably it may further come down, right? Because the momentum is in the sideways. So not to be attempted. No, stocks on this counter should not be attempted now. Right. So overall, you can see that IT is very bullish, over bullish. Probably you can say like that. FMC is also bullish. Auto and pharma is sideways, and real estate also is sideways. So, so IT and FMCG is something that you can look at stock wise. Now let's look at USD INR, how it is performing, how the dollar is performing. We'll see before that. So DXY dollar index, you can see that it's strengthening each day, right? Just taken support at the previous support zone, and it is some kind of a W pattern. So it may break out of this 93.6, means dollar, rupee will weaken like anything. So today also this wide range candle shows that dollar is strengthening. That's the reason why IT is rallying like anything, right? Brent oil has dipped to the 67 kind of levels, and then it slightly bounced there. So it is retesting that level of 67, right? So third or fourth time. So which is good for economies like ours to have oil prices stabilize instead of shooting up. So it shooted up to 77 levels due to some OPEC issues few weeks back, right? So that has changed now. Now the interesting story here is that after the bounce, when dollar strengthened, the gold had fallen down, and that hammer pattern bounce happened, and then continuously 4-5 days of up move, and today it's kind of an indecisive small candle because it's the top of the resistance zone. So right, but it is consolidating around this long resistance zone, right? Two lines that you see here. So it may attempt to go up is in the coming weeks or days, and try to hit the top of the channel once again, most likely, right? So that's gold. That's the global commodity. So global markets, if you see at the time of recording of this, you can see that it's slightly negative, right? So Nasdaq is showing negative. Yesterday also, it had big fall that got recovered later on, forming a bullish hammer, right? So it's some kind of consolidation is what you see on the Nasdaq. Today we are again seeing that 150 points are down, right? So we'll have to check this again tomorrow before the market open to see if there is any negative view on the Nasdaq. But Dow Jones is not falling that much, but it's also forming bearish candle. S&P 500 is also bearish. So overall there is even the CAC, DAC and UK. So European markets and Chinese market is 126. So overall, there is some bearishness that is seen in the European and US and the Asian markets, which is something that we have to recheck tomorrow to confirm. Along with we'll have to check the SGX whether it is reflecting that or not tomorrow, right? So that's a summary of the analysis. Now, um, um, so just to before wrapping up, I'll just give few of the founders, right? So this is Apollo Hospital, right? So you can, this is a very good chart. So this is something that we missed to get it on time, right? So there was a clear box pattern consolidation, right? That is happening, and then clearly broke out. Then again another consolidation it broke out, and you can see that there is a reverse divergence that is seen there, and that this is a 21% move that you have missed, right? Now for entry for this, you'll have to wait for the retracement to 23 levels before you can take it, right? So that's now otherwise all IT stocks are worth looking at, right? So I posted it earlier, so I'll just quickly take TCS for example. So TCS did an excellent move today. So that is something that you can look at, right? It had a resistance. We have identified that resistance. It hit there once, twice, thrice, fourth time it broke out, and look at that. It's a 5% move, and more may be left, right? Because all other IT stocks are rallying. This was consolidating after the result, but now there is a lot more chance than it can. But it's better to wait for a small retracement candle that comes in, and then you can enter and ride the trend. Is what I'm saying. So overall, just to wrap up, today's analysis, we can see that excellent momentum and trending is what is happening in Nifty, but Bank Nifty continue to be losing the momentum and consolidating and not at all supporting, right, the Nifty to hit the 70,000. That's where we are now. Fyers are not buying, not selling too much, but domestic institutions are compensating for that selling, small selling that the Fyers are doing. So which is something optimistic, and IT is doing vertical rally, right? Whether it is, so that is only one that FMCG has picked up today, but all other sectors are not moving. The auto is not moving, the bank is not moving. So what else do we have? Just IT. Will it sustain? So that is something that we have to be cautious. When the market is moved up so much, right? It's 665 points in just 10 or 11 days, right? So it has to take some breath before it do. So that consolidation of small corrections and all can be expected anytime. So entering on a positional trade at this point may not be wise until you see a small pullback. uh, those who are already positionally long on Nifty or indices don't have to do anything, just have to trail the stop loss and then have a clear understanding of 16,000, 16,150, 16,350, all those levels clear, right? And for intraday, it is very tough, as I say, right? The VIX is very low, so selling is tough. Buying also is tough because it's very choppy, right? Even with the low VIX, right? Occasional spikes comes and then dies out. So market is making V-shaped recoveries like today for so many days. The same thing is happening. So you got to be cautious with small, to have the losses small, and then whenever it breaks out, make the big profit. So that's how we have to play the game. I hope this gives you an understanding on how the market performed, and where we are. Gives a context on where we are, and then it helps you to plan for a better trade tomorrow. Right? If you like it, hit the like button and then subscribe and share it to all your friends and relatives or whoever you think may benefit from this. Right? So that's the way you keep us motivated to keep doing this every single day. Right? And we promise to give valuable content, but we need your subscription for sure. That's one that doesn't cost you at all. Right? Thank you so much, and happy trading and happy learning.